Guys, I'm not going to sit here and sugarcoat you guys this glamorous picture of this upcoming week, what's going to happen with AMC stock. It might not be pretty. We're definitely looking at a pretty worrisome week, in my personal opinion. You're starting earnings season, and I don't think it's going to be all too great. So I want to give you guys my expectations for this earnings season and kind of how it will affect the markets. Now, I want you to keep in mind the things that I've been saying over the past 3, 6, even 9 months. We need to see this happen. We need to see the stock market coming down in order to see the MOAS. Now, if AMC stock reacts the same way that we seen on Friday, with the stock only down 2.75% and other stocks, even Apple, down 3.2%. So AMC really not dropping as much. That's going to be a great thing, but nobody can sit here and guarantee that that will not happen. So I kind of want to give you guys like the worst case scenario, throw the kitchen sink at you guys in that regard, and kind of what I expect, because we're getting closer the more the market falls. So we're going to dive into it. Hit the like button, subscribe to the channel. I hope you guys are enjoying your weekend. If you guys want to come trade with us in real time, every time I make a trade, earnings season is the most exciting time where you can turn just a small amount of money into a very large amount of money. So I would love to have you guys over there if you guys want to be a part of the action. So let's dive into it. AMC stock on Friday down 2.75%, down 0.5% in after hours. This stock performed better than Apple. It performed better than a lot of other stocks. A lot of stocks that people would say are a lot better than AMC. Now, there's a lot of reasons why this could happen. Maybe, hedge funds, they kind of know what's going to happen. There's going to be a catalyst or something that comes out that I cannot sit here and foreshadow for you guys. Or it could just be the technical setup that we've seen. Obviously, the stock went straight up. It went straight down. To a certain point, you do see a bounce, and we have been seeing a consolidation with AMC up April 11th, 2.63%, down 7% the next day, and then up 6.37%, and now down 2.75%. We're consolidating. We're pretty much staying flat in this range, and we're fighting around the 50-day moving average. So there's definitely a lot of momentum kind of in both directions. We were green on Friday at one point. So that's what I would kind of point it to. Technicals here, or you could say the fact that AMC is closer to its fundamental valuation. That would make a lot of sense to me. Or just hedge funds, institutional investors, they kind of know a catalyst is coming, something along those lines. Doesn't really matter why it happened. It happened, and that's a very great sign. But we have earnings that start this upcoming week. With on Monday, you have a lot of banks that come out before market and after close, and then on Tuesday, that's where things really start to kick off. You have Johnson & Johnson, IBM, Netflix, Interactive Brokers, Hasbro, Stride, and then a couple more banks. So it's going to be very, very key what happens with Netflix, Tesla, and Snapchat for this week. And Tesla is going to be on Wednesday. Now, for Tesla, I do expect it to be a positive reaction, but then again, a lot of people are concerned right now that Elon, there's a lot really with that. Honestly, I can make a whole video on it, but long story short, people are concerned that Elon going after Twitter will take its focus away from Tesla, and at the same time, to buy Twitter, he would have to sell like 30 million shares of Tesla. So it would be a large stake he would have to sell. Maybe he already sold it. Maybe that's why Tesla has already went down so much. Who knows? He says he has a plan B. So we'll see. That's going to be a big drama point this week. And then you do have things like Kinder Morgan, NASDAQ, Abbott, P&G, which these are going to be important in their own regards, right? Consumer like steel companies, Kinder Morgan, for their own sectors, it's going to be very important. But Tesla is going to be the main key right there, and no surprise he chose 420 to report earnings. Pretty ironic, and I don't think that was on accident nonetheless. But as far as Thursday, yep, you have Snapchat, you have American Airlines, you have AT&T. American Airlines might boost up the travel sector, so that's something that I will be watching pretty closely. Like Delta Airlines said, they just had their best month ever, best week ever as far as bookings and all of that. So people are definitely going out and spending. So if people are spending money on travel, they might not be spending money on things like Netflix. I think Tesla will likely have good earnings. I think Snapchat will likely have good earnings, but it's all based off of my hunches. So don't base any of your trades based off of that. But I think overall, you're going to see a pretty negative sentiment here in the next week or two. And how exactly does that play into the stock market and AMC in general? Because AMC is a part of the stock market. Now, let's talk about what happened with AMC as far as the data that you guys need to know, and then we'll talk about exactly what I expect for the next couple of weeks. And I think that's why you guys really clicked on this video. So the short interest of free float is 19.82%. Current shares that are sold short of 102.16 million. Utilization of 100%, and days to cover sitting at 2.42. So not too much has actually changed here. Still looking prime for that short squeeze anytime. We will take it, baby. But the option activity had a 0% positive order value. On Friday, over the past week, you've seen 140 orders totaling 52.02 million, positive order value of 45%. So, pretty neutral as far as the week and option dollar amounts going in, puts or calls. It was pretty neutral overall. The Stocko Tracker data looking ahead for this week is about 6,700 calls that are in the money, 95,000 that are out in the money. That's a pretty decent start to the week, but it really only depends if we get a catalyst. These stocks can run really big, 100, 200, 300% in a day, but they need a catalyst. They need a reason to run like that. And if they don't have a reason, they're not going to run like that. They're going to trade based off of what the market sentiment is throwing at them. So very important to keep that in mind. It's not just based off of who's necessarily buying or selling AMC on a daily basis. It's really the market sentiment and is there a catalyst or not. That's the main key. But as far as AMC heading into the future, I want you guys to really keep this in mind. We need to see the markets coming down. If there is no catalyst for AMC, AMC will also come down. Now, I think you're going to get a lot of back and forth action at these prices and at the $15 level. And depending on what earnings do, that's really going to be the main driver. If earnings are really bad, and not even for this week plus next week, because next week you do have other stocks like Apple. Let's go ahead and take a look at this upcoming week. Not this week, but the next week. That's going to be the main week. You have Activision Blizzard, Microsoft, Google, UPS, Visa, 3M, GM, Facebook, PayPal, Ford, Qualcomm, Boeing, Teladoc Health, Spotify. And then on Thursday, you have Apple, Amazon, Twitter, Intel, Roku, Robinhood, Caterpillar, Nokia, Southwest Airlines. And then on Friday, you have a lot of these oil companies, ExxonMobil, Chevron, Phillips 66. You have Abivi, Bristol Myers, Honeywell. So it's going to be a very interesting next 2 weeks. Now, I am not very bullish on some of the largest stocks, right? I'm not bullish on Facebook, not at all. I think they're going to be spending too much money for something that is 5 to 10 years down the line, the metaverse. Pretty bullish on PayPal. They've already gotten beaten into the ground. Google, pretty bullish on that. Pretty bullish on Snapchat as well. Advertising is definitely going to do well as the consumer does slow down. There will definitely be a push to advertising. I'm pretty neutral on Microsoft. I'm kind of neutral. People kind of need their service. But Apple, Amazon, and Facebook, some of the largest components of the markets, not bullish at all on them. Why? Well, Amazon said they cannot offset inflation. They cannot offset paying their workers so much money. So they basically told us they're going to have a bad earnings report. Apple, they've had their demand pulled up 2 years by giving out free money to people. People went out and bought those Apple products. So people are not rushing out to buy more Apple products unless they break their phones or whatever the case is. And that obviously happens. So it's not like they're going to have zero revenue. They're going to have a lot of revenue still, billions and billions of dollars. But comparatively, coming off of last year where their lowest quarter of revenue was $84 billion, I think it's going to be pretty hard to sustain and even grow those revenue numbers. And I think that's what some people are expecting, at least the revenue to stay consistent, if not grow in this upcoming year. And I simply don't think it's going to happen. Now, Apple does not give guidance, but if they do give guidance or bad guidance from Amazon, from Facebook, from even Google, Microsoft, these other players, it's not going to be a great sign, because the markets, they don't care about the numbers too much. They really care about the guidance that is coming out. And if guidance is bad, that's where you're going to see things really start to get clapped. So I think that's pretty important to know. The largest players in the markets, and if you look at the S&P 500, how it's broken down, Apple's almost 7% of the S&P. Microsoft is 5.63%. Amazon 3.56%. Tesla 2.21%. Google about 2%, right? So these large companies, if they do bad and there is a real surpriser here, then you're going to take the whole markets down, just like we've seen with Netflix. And I don't think they're going to have a lot of positive things to say as the consumer is slowing down, as inflation is very high. People are not rushing out to buy the things that they have had the opportunity to buy in the last 2 years. So, take that for what it is. As far as what I think will happen with the markets and AMC, I think we will likely trend downwards. I think there's this large chance that we do trend down to about $15 per share. Even we could go, lower than $13 per share. And I would actually encourage that. Why? Because I could buy more shares for cheaper. That's obvious. But as the markets go down, you start to reduce the amount of money that hedge funds and institutions have to cover those margin calls. So if the markets drop dramatically, let's say down to like 360, the markets just get absolutely whacked, which I don't think will happen just based off of this earnings season. You'd really need something else to happen. Maybe it's a nuclear attack like they're talking about now, but really a topic for another video as well. If you fell dramatically, then AMC started to rip from the bottom, just like you've seen in 08, 09, Volkswagen overstock. You guys get the deal with that. Then that's where you really start to get these margin calls that turn into forced share liquidations because they don't have money to service those margin calls. And especially now in a volatile moment, like we've covered over the past year, they are now getting intraday margin calls, and they have 2 hours to deposit funds. By the end of the day, if they do not have funds in their margin account, they get liquidated. It's not really like you or me, because we're not really risking the financial system here. If you got a margin call, or I did, you have 2 to 3 days to deposit that money into that margin account, right? They only have 2 hours. So when they don't have enough money, when the bond market has been selling off the way it has been, they're losing on the bond side. If the stock market sells off dramatically, they're losing on the stock side. If AMC gets a catalyst and starts to rally at the bottom, which is very easy to do, like 08 and 09 Volkswagen, Overstock, these other companies that did squeeze, that's where you really start to get into the liquidations, the forced share liquidations. A margin call does not have to turn into a forced share liquidation. A margin call turns into a forced share liquidation when there is not enough money to service that margin call. And it can come in the form of collateral, grade A collateral, triple A collateral, like we've went over the past 3 to 6 months. It really reduces that collateral when the markets do go down. So those are basically my thoughts as far as how low AMC could really go. I hate to throw out just a number here, but I think $10 would be like the lowest it could go. If the markets did crash and went all the way down to like 360, then I think AMC is possible could go down to 7, but that's music to my ears. You guys got to look at the whole picture here. It does not matter what happens with AMC. It does not matter one bit. It matters what is going on in the stock market. Does AMC have more catalysts on the horizon? Is the business getting better? Is there a chance that we get a catalyst that is good, that people like, right? And obviously, they're buying businesses. That's going to be the best catalyst that we could get. So those are really my thoughts. Not really to sugarcoat anything. I'm not very bullish here in the for the next, I guess, call it couple of weeks for earnings season. I could be wrong. I've been wrong before, but I think it's going to be pretty hard for companies to impress investors this time around. So that's basically going to be all. Hit the like button, subscribe to the channel if you guys found value out of this video. Thank you guys for watching, and I will see you in the next one.